Hello everyone, I'm Sergiu Draganus and I'm very glad to have you here present for the panel Crypto Exchanges Infrastructure Challenges. I'm here together with Tamas from SEON, with Michael McCarty from Shrimpy, with Ilia from Finery Tech, with Alexey from Orion Protocol, and with Jason. Okay, Jason, welcome. And Jason from CoinPayments. So I will kindly ask you for a short introduction of what exactly your projects are doing and how they are helping other projects in the crypto space. Please. So please, I don't know. Please, Tamas, please start.
Thank you, Sergio. So my name is Tamas. I am the co-founder of SEON Technologies. We are developing a fraud prevention solution for online businesses, including crypto payment companies.
Thanks. Okay, let's continue. Michael.
Yeah, so I'm the CEO and co-founder of Shrimpy. So at Shrimpy, we are building a platform where other developers can connect to crypto exchanges. So currently we support 16 different crypto exchanges where you can plug into these exchanges, access data, execute trades, and so on.
Okay, let's go further, please. Ilia.
Hi, I'm Ilia Drozdov. I've been working in the electronic trading business since 2010, first in the brokerage house, then algorithmic hedge fund. 3 years ago, we founded Finery Tech, and now working on a non-custodial trading platform called Finery FX. It allows peer-to-peer trading, real-time clearing, and post-trade settlement.
Thank you. Alexey, please.
Hey everyone, I'm Alexey Klaskov. I'm CEO of Orion Protocol. So in short, Orion is a liquidity aggregator protocol. We pull in liquidity from different sources, actually of entire crypto markets, including centralized, decentralized exchanges, liquidity pools, and we are solving the most challenging problems in crypto trading, such as low liquidity, security, inefficiency of market, and weak interoperability of projects. So essentially, we are building a product for retail, for business, for enterprises, and almost any projects requiring trading or exchange functionality can benefit from Orion, receiving always best possible price combined with low fees and almost unlimited liquidity.
And Jason, please.
So we run a number of different platforms and systems, but our majority of our business is CoinPayments. We started in 2013. We run a cryptocurrency payments platform, shopping cart plugin systems and APIs to allow merchants and users and platforms to easily accept cryptocurrency as a form of payment. And we're processing today, we're processing over $130 million a month plus, supporting merchants in 180 countries around the world.
Okay, thank you for this. So, okay, so again, I'm my technical assistant. It's announcing me that we have another guest joining currently the panel. So I will kindly ask you to do a short intro, please. Okay, I have. Okay.
I think that you may see. I think you may see Raj, who joined here.
Yeah.
I'd send him the link. I sent him the wrong link probably. He is actually my MLRO. He's the compliance officer and manager for HODL Tech, which is actually a cryptocurrency wallet platform that we have. It's a custodial service based in Estonia. So I think he joined in there for a second.
Okay, so it's good. So. I'm Sergiu Draganus. I'm the founder of CryptoCoin Pro. We are basically a platform which connects blockchain projects to different type of service providers as you guys. Because as a crypto exchanges or blockchain projects they are facing several risks. And I would like to talk now about risk because basically your solutions are solutions which are covering risks. I remember when we started operation 2.5 years ago, almost 3 years, we had risk with the fraud, high fraud risk. We had risk with volatility risks, and for this, liquidity providers are more than welcome. We've tried developing our own wallet manager system, and we've added a lot of money, but we are not able to deliver it at the levels we should need it. I mean, in terms of scalability, because it's pretty difficult. Only the maintenance costs much more than the fees we are paying to you guys, by the way, Jason. Okay, so basically, your solutions are amazing for the risks that are covering. And here I would like to allow each of you to provide a little bit more details about what exactly are you doing and how you are covering the risk. So we can start, for example, with the fraud risk, because we all know that in the payment industry for crypto products, there is a huge number of frauds attempts. So please, Tamas, if you can continue here.
Thanks, Sergiu. Yeah, so basically, the funny story is that actually in 2013, with my co-founder, we were working on a completely different business. We started a crypto exchange, and we decided to introduce a payment gateway because bank transfers were too slow. And in the first week, we got more than 2,000 euro in chargebacks. So we started to look out for different fraud prevention tools on the market to prevent chargebacks. And we couldn't find any efficient tool which could cover the whole digital footprint of the customer. So we decided to build our own tool, and we realized that this could be a great B2B software as a service business. So we pivoted and raised capital from venture capitalist firms, and we incorporated the company in 2017, just after we graduated from university with my co-founder. And now we are more than 30 full-time employees. We just opened office in London. So we have the headquarters in Budapest, actually Hungary, where I'm originally from. And we could see a nice growth lately in the high risk vertical. So actually we started to work again with crypto exchanges, because the risk is still huge, and we see it's very challenging, because it's really hard to find the right balance between a good approval rate in terms of conversion and also having a frictionless boarding process. So if you go right now to one of the biggest crypto exchanges with starting the name with the B, you can see that it's very frictionful to actually still buying crypto from them. So you have to upload utility bill document, you have to upload an ID. So it's quite time consuming. So the conversion might be not very good on their end, but of course they want to prevent any type of loss and reduce risks. Our solution is actually helping to set up kind of like a dynamic friction in terms of customer journey. So based on our frictionless digital footprint analysis, when we try to collect all the accessible information of someone, IP, email, phone, etc., decide whether the customer should go to further verification such as ID or utility bill or not. So in very short terms, that's where we are now, and that's how we work with different crypto companies. We also support other different companies from different industries such as online lending, online gambling, casino, esports. So this is all different. So fraud is different for all these companies. Crypto is the highest risk because it's essentially like cash for fraudsters. Credit card information is very easy to steal. So then to reuse is the easiest way to realize a financial gain is actually to go to and try to process for crypto payments. So if you look at the biggest crypto exchange in the USA, the name starting with the C, you can see that in the US they don't allow purchasing crypto with card, but only with through a specific API through Plaid. So we see that it's a huge risk, and as soon as I think PSD2 in Europe will come to live mode, then we can probably have better kind of setup in terms of payment flow, because then we don't have to work with acquirers who are also having some issues with false positives and internal fraud prevention. So it's kind of muddy now, but I think it's going to the right direction.
Yep, thank you. So now, in terms of how cost optimization can be reached for crypto exchanges, because in our audience we have confirmed several thousands attendees, but many of them have their own crypto exchanges, smaller or bigger. So how does cost optimization can be reached to process automation? And here I would like first to discuss about the liquidity part and the way the service works exactly, and after to discuss about the wallet management part. So I don't know here, Michael, if you can say some words on how exactly, which are the main advantages, the solution that you have it's bringing, and the way it's integrating with other exchanges and things like this.
Yeah, absolutely. So, you know, one of the things that we try to solve, as I previously mentioned, was this sort of creating a layer on top of these exchanges so that a developer doesn't have a lot of issues when integrating a new exchange. So one of the problems that we found for developers is every exchange that you integrate requires a unique set of APIs, requires unique infrastructure, unique API limits, and all of these different things. So when we think about, you know, a new exchange coming onto the market, some of the things that we look for as a service provider for other developers is, does their APIs kind of fit into the structures that these other exchanges have been developing? For example, does this new exchange have these, you know, strange endpoints or strange data that they're returning? And how would that kind of fit into our existing infrastructure? Or the infrastructure that these other developers are trying to build. Because, you know, at the end of the day, if we're going to integrate an exchange, it needs to be reliable, it needs to be accessible for developers, it has to have liquidity, it has to have all of these different things to provide a pleasant experience for not only the traders that are executing the trades on the actual platform, but also the developers who are going to be plugging into these platforms and, you know, executing trades or managing portfolios for their customers. So, you know, one advice that I would give to people who are building their own exchanges or looking at building an exchange right now or bringing APIs to the market, I would suggest essentially copying or doing things that are already existing in the market. So if somebody like Binance has APIs that behave a certain way, there's probably a reason that they do that. And it would probably be good to have your APIs kind of mimic some of the things that other exchanges are doing in the market, because that will increase the chances that people like us at Shrimpy will integrate your exchange.
Here, what would be very interesting for me to understand, it's basically the liquidity part. Again, I'm not a native English talker, as you can see, speaker. Okay, so when I talk about liquidity, I see two main perspectives, two main point of views to look to the liquidity. One of it is obviously the technical part, which can be provided, and the other part is the liquidity itself, meaning the availability of funds to be able to settle the transactions. You know, maybe you have a big transaction, you are an exchange with a limited amount, like 1 million or 500,000 or less or more, and the client is coming, and or several clients, you have a peak in your orders, and several clients are taking a huge amount of orders. How is this managed? So maybe Ilia can help us a little bit. Alexey, also Mike, please.
Okay.
Feel free to come in here.
Sure. So speaking about funds availability and capital efficiency, right?
Yes, exactly.
Yeah. So currently there is such an issue as, you know, liquidity. So these current assets that you need to use in order to settle with the client as soon as possible. There are two types of clients, right? The first one is that they deposit funds to your exchange, and they, you know, you keep these funds, and they are not going to withdraw then the next second after the trade is done. But the second type of clients, they require almost an instant, immediate settlement. So I guess that the market is moving into the direction that there are some solutions that help overcome this issue. For example, so there is a custodian UK-based entity called Coiny, and Coiny customers can now hold their assets with Coiny and have the ability to trade on Bitfinex. So without moving funds, you can trade on a centralized crypto exchange and then settle with your, say, OTC customers. Etana Custody allows its clients to instantly send funds in 5 major currencies to Kraken and back from Kraken to Etana Custody, like, I don't know, in 1 minute. So I guess in a year or half, we will see more solutions like this that will increase the speed of moving the funds among the, you know, market participants. The, you know, Silvergate network in the US also allows you to settle your USD denominated trades with a speed of light, and actually at no cost for participants, those who are on this network. And I guess something will also appear here in Europe. There are some names that are trying to provide such a service, but there is no, one clear leader so far.
Okay.
There is a few links, and a couple of guys that are doing that. They work with some of the exchanges, and their settlements are instant within their network. That are in the European markets that allow for that, because in essence they operate almost like a digital wallet, which in essence is how the Signature Bank system does it, SingleNet, as well as the other banks that you mentioned in the US too, is in essence settling within their faster payments network or ACH network or those types of things. So some of the settlement systems that are working with some of the exchanges already have those sort of instant settlements, but they're with corporate clients that are basically within that same system. They're not necessarily focused on consumer-focused services.
Okay, excellent.
Yeah, one point also here. Yeah, for sure, liquidity is really one of the biggest issues, especially for DEXs, because we also see this year, 2020, that trading volume of DEXs increased significantly, but still liquidity on the centralized exchanges is much lower than on big players and centralized Binance, and others. That's why we in our project in Orion protocol created hybrid solutions that combines best from the both world, centralized and decentralized. So we pulling liquidity from big centralized exchanges via our network of brokers, which governed by our delegated proof of brokers consensus. So what we actually want to achieve here is that we want to have a completely decentralized network of brokers who can execute and who can settle your order, maybe part of order, through your API, through your account on exchanges. And almost any people, any users who has accounts on exchanges can run simple software and join this broker pool. And also for executing orders, they receive the transaction fee. So we still think that the decentralization is the future, but currently we cannot simply ignore big centralized players in the market.
So yeah, so on your side, basically the liquidity part in terms of funds is provided via the users of your network,
yeah,
which is
with
are
the
jumping
users
in.
itself. With the users itself, and users are decentralized, so there is no single point of failure. Yeah, so any users can become brokers here.
Yeah. So for the decentralized exchange or decentralized projects, it's very clear the way they are managing the wallets. Okay, so basically the wallets, the private keys and other things stay with the user itself. But for other projects, including the projects we are talking right now in this panel about, so I would be curious to find out more how you are managing the wallet management part. Because, for example, as I mentioned at the beginning of this panel, we start developing those systems on our own, but when we realize that in fact we want to offer a much wider number of currencies to be available, not only Ethereum and Bitcoin, things like this, we realize that in fact only the maintenance cost is much too high to do it on our side. So we've decided to go further and implement a third-party solution, which we are using and we are pretty happy with. So I would like to get your opinion on this side, and maybe Jason, I know you are a provider of this type of services, but you maybe can give us some insights, and after someone else can continue in this direction too.
Yeah, I mean, for us on our wallet infrastructure, we run a couple of different types of wallet infrastructures. When we first started, we outsourced the wallet solution to we actually used BitGo's wallet platform originally when we started many years ago. And then we developed our own infrastructure and custodial system. So really, CoinPayments itself works off of a custodial wallet platform. It's not decentralized. It really is a custodial centralized platform. And we are holding funds for all of our clients at all times. Mostly we hold it in a cold storage aspect for our own system. But we also have a multi-sig wallet platform that we've built and we're about to launch. The difficulty for us as a payment service provider and or gateway is a lot of the dependencies of how fund movement and sort of immediate transfers, immediate payments internally happen in a custodial service and doesn't require on-chain transactions. So for us, one of our service or one of the clients that we're providing a service to, they don't want to have any custody of any wallet and any assets of any of their clients because of the nature of the types of clientele that they're going to be providing services to. And we said that if the client isn't approved by us, or say they're outside of our risk tolerance, we wouldn't provide a custody service. So we do have a multi-sig, completely separate wallet with separate key management services and everything else. But for us, it's a matter of how payments specifically work, and for sort of the instant transfers, it works better for us to have a custodial wallet platform.
Okay, thank you. So if someone wants to jump in, otherwise I have another question. I'll go to the next question here. Which are the main challenges right now to scale up your activities? Technical challenges, I don't know, investment challenge, compliance, industry-related challenges in terms of what is happening right now with this crazy thing with coronavirus and things like this. So what is the bottleneck basically right now to scale up? I know crypto businesses are scaling up right now, but what are the bottlenecks to not scale up even faster? So yeah, this would be my question to all of you. So please feel free.
So from our perspective, this is first of all the regulatory burden and the changing, compliance and regulatory requirements, especially here in Europe, the adoption of new laws, and your ability, your design, the cost of actually following all these guidelines.
Mm-hmm. Thank you. Please.
Yeah, I agree with Ilia that compliance and regulatory policies become with every year more and more strict, and for sure it hinders in some extent of the development of our industry. But for sure, technical difficulty and technical challenges still exist. We still quite young industry. For example, we are as aggregator for sure we have quite difficult infrastructure of aggregator in real time, of providing high availability service with replications, and so I think all of three things that you mentioned influence development of our industry actually.
Thank you. And the last question before closing this panel is how do you feel, what is the trend you see in terms of stable coin transactions and other type of currencies with a higher volatility rate? What do you see behind the numbers that behind your platform? So do you see more transaction in terms of stable? Do you see more transaction in terms of Bitcoin, Ethereum, and things like this, or both are growing the same way with the same rate, to say so?
I can maybe step in first, just because we kind of deal with a lot of payment transactions specifically. First of all, a little piece, I think the regulatory side of things has been interesting, as actually allowing for a lot of adoption with businesses that may not have accepted crypto in the past. So I think with regulations and actually the acceptance between facilitation between banking, traditional banking, and off-ramps and on-ramps, allowing for more users and more adoption is really significant. And we've seen over a 30% increase in our business just in the last few months. And I think a lot of that has to do with adoptions and also with regulations coming into place. We do full KYC, compliance, AML, transaction monitoring, everything on every one of our transactions and systems. And although a lot of our team originally a year ago thought it was going to be damaging and we would lose clients. And in fact, we've actually increased clients. So I think that's really positive. On the transactional side, on related to the currencies, it used to always be around 90% of our transactions were mostly Bitcoin. And we're now at about a 70% transaction base in Bitcoin and 15 to 20% in USDT. Tether and stable coins are definitely having a major increase in actual digital transactions. And whether they are crypto or not crypto, is however somebody wants to say, decentralized, non-decentralized, the increase in actual transactions are increasing significantly using the stablecoin usage as far as a stable transaction. We also see a lot of transactions that are happening in other types of stablecoins outside of Tether as well, but it's still roughly about 70% of all of our transactions are still in Bitcoin.
Excellent, thank you.
Yeah,
okay.
we really see this trend, and and we will see this trend in future even further when most of transaction will be in stable coin, and the native coins will play a role of collateral. So I think it's our near future.
Okay, thank you guys. Thank you for attending. It was a real pleasure to have you here together, and hopefully we'll see each other on the next virtual blockchain summit. Thank you. Have a nice one. Bye bye.
Thank you.
Thank you, Sergiu.
Thanks.
Bye.
Bye.
Bye bye.